ebtc, and you are Enterprise Bancorp Inc. on the Nasdaq Stock Exchange. And I got that one off screener.nextbigtrade.com. Just having fun. It's a different layout to try to get a stock picks for Stan that passes screener on stageanalysis.net. It's we get the listings from EasyTrader. They're awesome. Got a small JPEG of the chart, fast overlook, and from nextbigtrade.com, you get it's a little bit more flexible, so you get to play around with. It's more interactive, so I recommend you guys going to screener.nextbigtrade.com and have fun. So if I'm in the mood to look for TSX stocks, then I could filter with that, and I could even fine-tune. There's pre-selections, and you could even fine-tune what stage you're in, the number of weeks, the volume, how far you're away from the moving average. It's kind of cool just to have fun around, fiddle with that. Then you got links to charts, Yahoo page, Google, and all that. So that's kind of fun. And just had a few hours fun there tonight. And this is what I got for you guys. ebtc. That came out. And it screaming, Patrick, analyze me. All right. Monthly candle chart. Whoa, this way. Scoot over the margin. Create myself some black space. Here we go. That's one of my emotion management techniques to make sure I don't use the frame of the chart to influence me subconsciously. If you see price action close to the top, you could I can only go down, and if you see the price action at the bottom here, you say I can only go up. Well, that's both false. So this is my monthly defined resistance, monthly defined support. Let me see what I got here. Already confirmed breakout last month. Remember, patterns within patterns. I start by the back, the bigger pattern, and then I dig myself towards the core, towards the price action. And here, I have the smaller pattern, which broke out on this line here. And it's always good, put those targets in, the bigger targets, and then the medium and the smaller targets. You'll sometimes see that the breakout line is not the one of the bigger one, but it was actually the one of the smaller one that was in effect. It's always going to be that one in effect, the first one. And then after that, if you have a close above a further away breakout line, then that one also compounds on top, is in effect. But remember, the most probable target of the possible targets is the one closest to the breakout. So if the breakout's here, oh, this target's more probable than this one. And right now, there's no overhead resistance. You could actually enter here. If you use my classic chart trading framework, I always put my sell stop at the bottom of the wick of the breakout candle. 1% of my NAV risked here. Position size accordingly. And then you put your buy stop here, then bracket orders, sell stop here, profit limit here. Whichever one is triggered first cancels the other. And that's how you do it. The low risk to reward. That's my risk. And my reward is 0.5. So not super duper, but you have a higher probability of reaching that target than a further away target where you get 1 to 1, 1 to 2, 1 to 3, 1 to 4, etc. Those Hail Marys. So the trend is up. Confirmed on the monthly candle framework. Doesn't mean there's not going to be a pullback to test back the resistance line. the breakout line, test the support, not resistance, now turn support, and go back upwards. But you're on the good side of that resistance. Weekly chart. Whoa, look at all these lines, man. Okay. What? I'm zooming in. Stage 2, stage 3. Stage 3 could become stage 4 or stage 1. Or stage 2. We're above the green cloud. That's our support, Ichimoku cloud. If you're above that, you are in an uptrend. So now that's confirmed. Remove that. What I do now is I look at the volume. Yeah, forget the chart. You know, in the stage 3, zoom even more. Whoa, look at the volume. Okay. I'm looking for candles twice the size of the previous 4 weeks, 4 or 5 weeks. This one's way more. So it's giving me a good signal that I had a breakout candle right above it. It helps me identify the breakout candle and indirectly helps me correctly identify the breakout line. So let's say I would have wanted to say the breakout line was here. Well, when I see that huge volume, I'm going to look for a close horizontal pattern. Hold on, let me clear that up. Remove all trend lines. Right here. Above 30-week moving average, above a horizontal breakout line. More than twice the average of the previous 4 weeks. I have the RSI going upwards. 60, 70, 80 going upwards. I already started moving heavily here. You won't want to play these breakouts, even if there's a nice pattern. It's because you're under a 30-week moving average. Never buy a stock if you're under. Never sell a stock when you're above. Make sure it's 30-week moving average, you're above it. And the more above you are, it's starting to pull up. See that angle? You're already starting the trend. And what happened here? Volume continued. So that's where we are now, guys. What could happen here is you could have a pullback. It also helps you identify where your support is regarding that breakout. And right here, you could anticipate within 1 to 3 months. So breakout 2 weeks ago, 3 weeks ago, 1 week, 2 weeks, 3, 4. So we could start having a move backwards now. Going back to here, the breakout line. So I'm going to put an alert right above here. If ever it gets triggered, and then at the actual breakout line, and even here, there's some resistance. This is a resistance turns support, this level right here. So if ever the price action starts getting to this area, I'm going to keep a close eye on it. Wait for a final candle, a hammer like that. That could sink through that support, but finally close above it. And then the next green candle I have that closes green, I enter here. So instead of entering here and having my sell stop all the way here at the bottom of the pattern and have a small position size since that's going to be equal 1% of my NAV. Now I get to enter about here, same place, my sell stop here. So I get to have a little bigger position size here. And after that, I have the confirmation. If it's on low volume, of course, going downwards, it gives me I have the extra confidence that the stage 2 will continue because of the contraction on low volume, because of the bounce of 30 off the breakout line, which is now support. And it's even better. Plus, it's going to be moving up. And you won't have to wait 1 to 3 months looking at your screen. Oh no, it's going down. My NAV is going down. Oh no, what should I do? Type of stuff, all right? Yeah, that was my funny voice. If you start thinking you have to take a step back, lower your position size. That's the first thing that's going to help you alleviate you concentrating too much on that daily noise, even weekly noise, understanding what's happening. That means your position size is too high. So take a 0.5%, 1/4% potential loss when you position size instead of a full percent. And that's a motion management technique to help you practice. And once you really accept and you really understand about these pullbacks and how it goes back up and what's going to happen after you buy in a breakout, you will absorb it better and react better and not land on emotional landmines. All right? Get all excited. There's a breakout. Let's say you would have entered this candle. Next week goes up. The week after that goes up. After that, after a month, starts going down. And then you think you failed. And your sell stop usually is too high. And then you have a wick that goes through, sinks through the support, the breakout line, triggers you out and then moves back up. And then you say, I hate trading. I'm quitting. Market's out to get me. It's not out. Understand that support lines, it's not stone wall. It's like quicksand. It'll sink in and then you'll bounce out. Put your sell stop super far away, guys. Small position size. Let that noise, that crazy one-day news there that has no bearing on the stock's actual underlining engine for the trend going upwards. It's just news, and it's the market digesting it, and somebody thinks it's bad, and then you get that crazy wick down inside, deep inside, triggering everybody out. They're not out there to get you, and nobody's out there to get you. Nobody knows you exist. It's just the regular fluctuations of the market or the price action for it to adjust. Like just human nature. If this would be robotic, we just have straight lines going up or down. And that's not the case. This is, you could say, the biorhythm of just human nature being applied through the chart, through the buying actions. Cool. All right, Pat, you talked enough. So ebtc confirmed breakout on the monthly candle chart with the implied targets there that I showed previously. And if you want to play it à la stand, well, you could enter right now and expect the pullback, and then enter somewhere here when you get that confirmation of the hammer candle or doji or any reversal type of candles. And then when the next green one, that confirms that was a low, and then you put the chances on your side with contracting volume, of course. So that's it for ebtc, man. Looking good. Stage 2, opportunity to get in now, a few weeks after initial breakout, or just wait a few more weeks for that pullback to happen and then get in there. All right. That's it. Do 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 do. See ya. Do 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 do.